So maybe a word or two about what is the ADB, because some of you may not be so familiar with the Asian Development Bank. And Ray started to tell you a little bit about it. We were set up 51 years ago. We're a bit of a mix between a commercial bank, think of a Citibank, for example, and a program like the United Nations Development Program, UNDP. So there's the bank part and then there's the development part. And our overarching mission is not to make as much money and give it in dividends to our shareholders, but rather to fight poverty. And related to that, to promote inclusive, sustainable development in developing Asia and the Pacific. It might be a little small to read, I guess better with the screen here. This gives you an idea of the areas that we're working in. So we launched a long-term strategy for our work in 2008, taking us to 2020, working especially to develop infrastructure, to promote environmental sustainability, promote good governance. The main areas where ADB works, frankly, are in the infrastructure space. So when we started 51 years ago, much of Asia was poor, it was rural, very low social indicators, and a lack of capital to invest in things we take for granted here in the United States. And so roads, investing in clean water, sanitation, electricity, power generation. And this hard infrastructure remains a big part of what we're engaged in, even as over time we've invested more and more and gotten more active in some of the softer areas of development, including education, health, social protection, also working on financial sector management and public sector management. And so how do we actually work? Well, we have 67 members. These are governments, about 2/3 in the Asia-Pacific region, the rest we call non-regional members, and that's an example of the US and Canada. And so I'm the representative for ADB, although we're based in Manila in the Philippines. I'm here to serve as a liaison with the governments of the United States and Canada, working from an office in Washington, but also to reach out and engage with other stakeholders, which include universities, with which we can pursue various forms of collaboration. Most of what we do is actually lend to governments, which then pay it back. We recycle the profits into further lending, and also to pay for administrative services, staff, travel, capacity building, and also that enables us to offer some grants in certain cases. We're mostly a lending and not a grant-giving institution, but we also do provide a certain measure of grants. And obviously at the end of this presentation, I'd be happy to address any questions you might want to explore. This is just an example of some of the tools that we use. As I mentioned, loans, we can do guarantees. Most of our engagement is directly with governments of developing countries in Asia and the Pacific, but we also work with the private sector. So we have a part of ADB that is sometimes taking equity shares, owning part of a company that may be providing some essential service in one of the countries we work with, the technical assistance. This enables us to do research and analysis on critical questions of development, and also to fund the preparation of due diligence around projects. So every time we finance, say, a road project or a treatment plant, this is physical infrastructure. We look at the environmental impacts of that. We look at whether there's potential dislocation of populations, involuntary resettlement. And so through technical assistance, we provide some fungible money to finance that study in order to mitigate the negative impacts. I mean, for countries that don't have basic interconnectedness among cities and regions in the country, roads are important, but roads are not, they have their negative impacts, and we try to minimize those. I'm going to just skim over some specific examples, because I've been speaking in generalities. What does it mean we fund projects? Well, here's an example of one, and this is interesting. So this touches upon energy, clean energy, as well as the finance aspect. As a development bank, we do a lot in the finance sector. And in this particular project, the PHI refers to the Philippines. Sorry for the shorthand and such. And the Philippines, again, it's where ADB is based, and it's one of the developing countries that draws on our services. The Philippines is very rich in geothermal. Lucky for them, because this is a clean energy source, cleaner than coal or oil. And this particular project we financed was generating bonds to sell to raise funds to invest in geothermal. Another example also in the energy sector was promoting the transport of natural gas in eastern Indonesia and providing access to energy and also clean energy to help Indonesia expand its energy mix. Another example of where we work is in railways. And oftentimes when we do a project, it's not just like in a railway project, not just go help finance building the railway, but also look at the corporate structure of, in this case, Bangladesh Railways, which frankly was not doing that well. They were losing money. So this package of support not only helped them expand and upgrade the railways, but also do some corporate restructuring to ensure that they could be on a more long-term financially viable basis. The transport area and the energy area, two I've highlighted, are key sectors for ADB's investment. This is where we've built up a lot of expertise over time, as is the case with water supply. Any guesses what UZB means? Absolutely. So when you think of Asia, Central Asia is probably not the first region you think of, but with the breakup of the Soviet Union, a number of the countries, well, basically all of the countries in Central Asia and in the Caucasus became members of the Asian Development Bank. So they paid in capital, they joined, they paid their entry fee, if you will, and all of them are to some degree or another receiving assistance from us. When the Soviet Union broke up, many of the republics, they had some financial challenges with the breakup, and they have not been able, and certainly in the case of Uzbekistan, to do the operations maintenance and upgrading of basic infrastructure, and that was the case of water supply as well. This project has helped Uzbekistan overcome some of the challenges there and improve water supply in different cities in the country. And one more example, again, just trying to concretize, what do we do, where do we do it? From Nepal. This is a project involving reform in the education sector, helping to improve the quality and access to education. One of the major developments we've seen in Asia in the last decades is that the percentage of students under, 16, say, that have access to primary and secondary education has gone steadily up. They're approaching full employment, even in poor countries in Asia. What remains, of course, are quality issues. A classroom of 80 and the teacher sometimes doesn't show up. You're in school technically, but there's still issues there. So we're still helping countries address that issue and improve their education systems. But increasingly, and this I'll get to later in the presentation about the challenges we are confronting as Asia becomes more prosperous, more and more we are being asked by countries to help with technical and vocational education. Think of what might be done in junior colleges, technical schools, community colleges here, skilling people in practical skills for the labor market. And we're getting requests for support in more of these areas rather than we need a school for the primary school children. They're already there. Now moving up the line, how do we build a productive, modern, well-trained workforce that can help our country be productive and have a competitive economy in an integrated world? So just a few examples there. What I'm going to do now is touch a little bit upon what are how's Asia doing, what are the prospects for 2018. This is based on work of our economics and research department. So most of what we do is financing projects, and I provided some examples there, but we also do research on different sectors and themes, including some sectors and themes that Notre Dame does research in, and that's one thing I'm hoping for in the future. We can collaborate a bit more on that, but also on the hard economics and looking at the country situation. So some of this may, let me put this in perspective if I will, so, and put on glasses so I can see what I'm talking about. The latest estimates for 2018 for Asia, in developing Asia, okay, so not included in here, for example, is Japan. We're looking at about 6.3% increase in gross domestic product. I'm going to compare that to the US and Europe in a minute. The 5.8 for this year, that is excluding what we call the newly industrialized economies, so Singapore, Hong Kong, Taipei. Those are faster, well, they were faster growing and they're richer countries or territories. And so the 5.8% includes them. 6.3 is really the developing, what you would think is developing countries, although many of them are quickly moving up the income ranks as well. As you see, it's similar to the last couple of years in terms of growth, but lower than it was a couple of years ago. By economy, you may have a particular interest, a place you visited, a place you research, a place you have relatives. In Bangladesh, 6.9% increase in the economy size expected this year. India with a strong growth rate. Some of the wealthier in East Asia, wealthier places, lower growth rates, which often comes with progress. So the richer countries tend to start from a higher base, and the increase year to year tends to be lower. You want to see very high growth rates in the poorest countries. Philippines, where I've spent most of the last 2 decades, 6.7%, which is better than it has been generally over the last few years. A little bit slower growth generally in Central Asia and in the Pacific. Okay, so how does that compare? Major industrial economies, think of the OECD member countries, 2%. The United States, 2.4%. The Euro area, so those members of the European Union using the Euro, including most of the big countries, 1.8%. And Japan, the most developed industrial democracy in Asia, continued low growth in 2018. One of the major things that's happening, and this is influencing Asia-wide growth, is in China, which has been built in part on its economy on manufacturing. They talk about China being the world's manufacturing floor, and you go to Walmart and the back of every product, where is it made? Many of them in China. China is moving up the ranks, more innovation, improved technology, competing at a higher level in the market, and also moving from a heavy reliance on manufacturing and exports. It's still critical to the economy, but moving more and more into the service sectors, which is also typical of other countries that have become wealthy over time. You see the service sector grow. They're also adjusting capacity and overcapacity in the case of coal and steel and petrochemicals. On the whole, I think one thing to cite is that Asia is really kind of driving world trade, in some ways driving the world economy. Inflation, we're expecting to be under 3% across Asia. That's certainly manageable. Commodity prices, so you had a sharp decline in oil prices, which is now steadied. Food prices have steadied, and that kind of stability is a good thing. And a lot of countries, importing countries, gained from the decline in oil prices, but that hurt oil exporting countries, needless to say. That had an impact on Asia. For example, Russia, a big producer of commodities, natural resources, exporting them. When prices collapsed in the last handful of years, that means the Russian economy, and for other reasons, was beginning to suffer, right? And the Russian economy soaks up, the labor market soaks up a lot of workers from poorer Central Asian countries. So you had a lot of migrant workers repatriated, for example, to Tajikistan, which had big impacts on the Tajik economy because of what happened next door in Russia. Tajikistan's a member of ADB, Russia is not. So just a word or two more about economic prospects before I get perhaps to the heart of the matter, and talking about some of the challenges to the Asian miracle and this major social transformation. 20 years ago, we had the global financial crisis, and since that time, countries have worked closely together to adopt more flexible exchange rates. They have higher reserves, they have healthier financial systems, they have deeper capital markets, better regulations. You have the ASEAN countries, basically 10 countries in Southeast Asia that are working in an ever integrated fashion, politically, economically, and that is helping to build a more sturdy base of cooperation. In terms of regional cooperation, I would say that worth noting that Asia's trade in 2016 grew faster than global trade. So increasingly, Asia is looking within, looking to its partners as ones to engage with on an economic basis. And we see now 57% of trade by Asian countries actually being done within the Asian region. And this may be enhanced if the Trans-Pacific Partnership, TPP, this is a big proposed trade agreement that the U.S. Administration decided it did not want to be a part of. Asia is talking about going forward with a couple of members outside of the Asian region, and this would have the potential of also intensifying regional integration. Just a few numbers on how regional integration is really become a major characteristic of what's happening in Asia. So I'm comparing 2001 to 2016 now. This is not on the slides. So in trade in 2001, 53% of trade in Asia was with other Asian countries. In 2016, that became 57%. In terms of foreign direct investment, it was 47%, now 55%. Equity, 12% in 2001 and 19% in 2016. China's trade, total trade volume in 2017, this past year, with 5 Central Asian countries, like Turkmenistan, Tajikistan, Kyrgyz Republic, Uzbekistan, it went up by 25% in just 1 year. So in different parts of Asia, you're seeing some big changes. You see more cross-border banking activity between countries. Equity markets, however, tend to be, they're still not terribly well developed. There's exceptions, but you're finding that Asia is more integrated with global equity markets, stock exchanges and such, than they are internally. Tourism, just one other aspect of regional integration, tourism is booming. There's images in the States of going to Thailand, and you think of the Western Europeans and others from, if you have a chance, you go down there and the lovely beaches and great food and friendly people. And now you are struck there, as elsewhere, by how much of the tourist population is coming from neighboring countries, particularly China. 60% of Chinese travelers stay within the region. And tourism, although it may not get the same attention in some instances as manufactured products, it's a huge and growing business, a huge employment sector for Asia. At the extreme, you have the Maldives, island country in South Asia, where 83% of the GDP is dependent on tourism. In the Pacific Islands, 18%. And the figures will vary elsewhere. They won't be in 80% in most instances, but you're talking millions of tourists and going increasingly from country to country. A last observation on regional integration, which is related to the economic prospects, is that ADB has done a study on, we've tried to index a measure of integration on 26 different socioeconomic indicators. So we did this in the last year, and what we're finding is that in terms of regional value chain and the movement of people, Asia is highly integrated, most integrated in those aspects. And in the case of trade and investment, Asia is becoming almost as integrated as the EU. It's approaching the EU. So this is quite a development. This doesn't mean political integration, but just talking in terms of foreign direct investment, trade, and economically, that's all rather significant. One other aspect that I won't delve into at the moment, but can address in Q&A, there's a very major initiative that most of you have probably heard of called the Belt and Road Initiative, or the New Silk Road, the proposal to build up trade routes that have been there for centuries, but expand them both on road and at sea, also by rail, from East Asia through Central Asia, through the Caucasus into Europe. And China, which came up with this idea to rebuild the Silk Road, has just announced that they're going to loan $250 billion from the China Development Bank for projects mostly in and around Central Asia. To put some meaning to that figure, in 2016 figures, that was about the same as the whole GDP of Greece or Finland. So that's just, and the intention for this initiative is to draw upon resources elsewhere. But that too will contribute to regional integration. So from here, challenges. Okay, so we talk about the miracle of the fantastic growth, booming middle class. Oops, sorry, jumping ahead. Let's start with just the overview of poverty, which remains ADB's overarching strategic aim. 330 million people still live on less than $1.90 a day in Asia. This is more than in any other region in the world. And some 85 million children under the age of 5 are chronically hungry. So it's kind of it's a shocking contrast that even as these countries become wealthier, and many are now, most of them are middle-income countries, they still have pockets of poverty and deprivation and major challenges. Okay, I want to talk briefly before maybe pointing to some like solutions and ways forward on some of these issues, not trying to cover everything. I want to talk about climate change, the infrastructure gap, and one other issue which I will surprise you with in a second. So in terms of climate change, Asia is the most vulnerable region in the world, or certainly among them. It's highly disaster prone. In the Philippines, living there for years, saw typhoons firsthand, wading through water, colleagues holding onto their cat, their laptop on top of a roof. I mean, it got dire, and we were, and I and the people I would tend to interact with were among the most fortunate and in higher parts of the city and that sort of thing, and not living in slums along riverbeds whose lives were really at stake. Just to say that it's an extremely vulnerable region, and even under the Paris consensus scenario. So we have the Paris Agreement on climate change. There's a consensus to try to keep the increase in temperatures from the pre-industrial age to 1.5 to 2 degrees Celsius. Okay, that's the magic fit. We got to keep the temperature increase there. That's going to require some kind of political commitment that is not quite there yet. But even if that happens, we're going to see land areas, ecosystems, and socioeconomic sectors significantly affected. Typhoons, monsoons, mudslides, storm surges. Now, if things go more like business as usual, if countries don't show the kind of commitment many of them were talking about in Paris, and we see temperature rise more toward 4 degrees by the end of the century, all coral reef systems would collapse because of mass bleaching, and this would have a massive impact on coastal communities and livelihoods. So, I mean, you look at Asia, you don't see the blue waters, but you know the map enough to know where the water is, and the communities living along the side there who are dependent for their food, for their livelihoods on fishing stocks, which are already declining. If the coral goes, then we're talking humanitarian disasters. A business as usual case with climate change could also trigger severe disruption of ecosystem services, vital to the Asian economy. And as I mentioned, it could lead to humanitarian disasters, including unimaginable migration surges. And this would all potentially happen in the lives of the students in graduate programs here or in their children's lives. I mean, it's a creeping phenomenon. It's not some distant future we can't possibly imagine from here. The Lancet, which is a journal of record for the health sector, has highlighted extraordinarily high negative impacts of climate change on health, and as energy demand in the region of Asia rises, yet supply remains insecure, conflicts are a real potential outcome. Imagine living in Pacific Islands that confront the very real scenario in some cases, like Tuvalu, of a situation where one day your country will disappear beneath the waves. This is not fantasy. This is what the best science tells us, the direction that things are going. In Papua New Guinea itself, a country of many islands, they're already relocating people from some islands already. So, and at the same time, the complexity of climate change in some regions, it will be not too much rising water and storm surges, but a lack of water. Arid regions may face severe droughts, which have implications for irrigation and basic survival. So a bit of sobering views on climate change. This is not all happening tomorrow and this coming year, but this is something that Asian countries, like the globe as a whole, has to grapple with. We are responding in part by doubling down on our investments in climate change. So by 2020, we intend to put $6 billion a year into climate change mitigation, working with countries to help them develop a greener mix in their energy, and also the fact that we're already seeing changes and problems, climate change adaptation to allow countries to build resilience, to be able to support life in changed circumstances brought about by changing weather patterns. Infrastructure, this is the second of three issues. The third one I didn't mention, and that's aging, which I'll get to in a sec. So climate change, infrastructure, and aging. In the case of infrastructure, although we've seen a great expansion in basic infrastructure throughout Asia, the estimate we've come up with is Asia needs to spend 1.7 trillion, that's a T, trillion dollars a year on basic infrastructure. Most of that in energy and transport, but also ICT and water. Right now, it's investing about half that, which means unrealized gains, blockages to commerce, to trade, to developing the economy. Most of the investment is made by governments. A lot more money has to go in there. And this is one of the great challenges that the region has to deal with. And something that preoccupies us as one small player in a bigger picture, how can we help channel more financing into projects that support basic infrastructure? Now, I'm going to go through 3 slides here just very quickly, just to explain the issue of aging. These are a handful of countries in the Asia-Pacific region, but it's kind of indicative of a broader trend. So People's Republic of China, Republic of Korea, Japan, and India. Okay, you see everywhere, where are fertility rates going? Down, okay? So fewer young people. Life expectancy, a good thing. People are living longer, and they're living better, and they're healthier. Life expectancy, so you have more people, and they're sticking around longer. Well, you don't have more people. The people that are around are sticking around longer. And this is leading to population aging. You don't have a lot of, the fertility rate's low, you don't have a lot of new babies, you have old people getting older, and the consequences of this include eventually a declining working population. By 2030, 200 million people, there'll be 200 million more people over 65 in Asia. Japan is the oldest country in the region, not far behind our other countries and economies, Hong Kong, Korea, Sri Lanka, and South Asia. By 2030, it seems like far away, it's around the corner, you will have almost 30% of the population of Japan being 65 years or older. What the issue is the impact this is going to have on society, on well-being, on the economy, on productivity. So France, like other Western countries, had aging as well. And they moved from a situation where 7% of the population was 65 or older, from 7% to 14%, and they're a bit above that now. It took 100 years, more or less, to go from 7 to 14%. Okay? In China, that step is going to take 20. Okay? So you had 20 years. So what you have is societies aging before the country's rich. So Europe and the US, Canada, were able to accommodate these changes, generally speaking, by building social safety nets, providing pensions. Yes, it's not perfect, but relatively speaking, countries are rich and could invest in some support structure to accommodate an aging population. This is happening at a time when the vast majority of Asians do not have pensions or reliable social protection. I'm sure if you work for a company or the government, military, you're good, but there's huge informal sectors where you don't have basic social protections like health insurance, which presumably all of you have. That's not the case for informal workers in many parts of Asia. So you've got this issue of increasing dependency ratio, fewer workers supporting more older people. That's not going to be completely sustainable. Pension systems that have been built up may not be sustainable if they haven't adapted to these shifts. Countries are ill-prepared. This is a creeping issue that hasn't maybe gotten as much press as more topical issues of the day, but this is a profound one that policymakers are increasingly dealing with. And it involves looking at a range of issues. One example of, well, I'll get to that in a minute, an example of how that's being dealt with in at least one Asian country. Other challenges. I'm not going to elaborate on these because one can develop a long list of major challenges, including these. Governance remains a perennial challenge. Wrap into that corruption, lack of rule of law. It's not only a challenge in Asia, it's a challenge everywhere. But this is intertwined with well-being and the ability for countries to grow. If you have predictable rule of law, stable regulations, and a good legal system, you're more likely to attract investment and the economy is going to benefit. Environmental degradation, so related a little bit to climate change, but this also concerns pollution and deforestation. Mismatch between workers and the labor market. This has nothing to do with babies at the laptop. That's a poor choice, actually. You have technology changing the kinds of jobs that are being done. You have schooling systems, technical vocational education systems that are not keeping pace with the world. and that's a big challenge in terms of employment. Urbanization, China and the rest of Asia is all becoming much, much more urban, which has certain benefits in terms of people are closer together, you can provide economies of scale, access to facilities nearby, water, health, education, but you also have this in an unplanned fashion in cities that are not prepared to handle a huge influx of people, and some cities are choking. Where I was living in Manila, some colleagues would spend 2 hours getting to work and then 2 hours to get back. And it's not the only city in Asia that has that kind of problem. Capital markets have become more developed, but still have a long way to go. You want to have more effective use of local resources, not be dependent on foreign sources. And inequality is, some might argue, the most pressing of the other challenges. We could talk about that if you wish. The Sustainable Development Goals. The world has agreed on the SDGs. The General Assembly, everybody signed on board. 17 goals. You've all heard of the SDGs, right? The Asian Development Bank, like other development players, is supporting the achievement of the SDGs. We are financing programs and providing technical assistance and knowledge to help our countries, our beneficiary countries, achieve them. We are not working equally on each one simply because we are not set up or specialized to work in every area. But some of these, we have a pretty big role to play, including provision of electricity and helping people become more connected, roads, communications, water supply, obviously. We do some work in education and health as well, which should be kept in mind. So the SDGs, this is the guiding map for basically the whole world when it comes to development. Very important. The growing middle. So I alluded to this before. Much of Asia now, most Asian countries are middle income countries. Now it's a pretty big band. So to go from a lesser developed country to the middle income country, and at the bottom, you're still, you're not flush with cash, but you're moving up. And at the top end, you're talking countries that are soon going to be high income countries. And you can see in the two columns between 98 and what's forecast for 2030, basically we are a region of, becoming a region of no lesser developed countries. So getting at one of the questions Ray had is what's the role of a development bank when there's no more development to be done? Everybody's in a middle income country moving up. This is one of the challenges that we confront, is in what is our purpose and how can we contribute when countries have become a lot wealthier? And I have a response to that, of course. Role for MDBs. Okay. Infrastructure financing. I had highlighted that along with climate change and aging as three major challenges, as much as we do. And so last year we did $19 billion of financing. If you include co-financing, we rallied from other sources. It's about $29 billion. And then also working in Asia, in at least some parts of Asia, are the Islamic Development Bank, the European Bank for Reconstruction and Development, the European Investment Bank, the World Bank, the Asian Infrastructure Investment Bank, the New Development Bank, used to be called the BRICS Bank. All of us together, everything we did last year, and we financed 2.5% of the investment in infrastructure. So there's a lot more work to be done there. Even as countries become wealthier, there's still need for quality infrastructure. If you take PRC and India out of the picture because we're such small players there, then we become more important elsewhere. And in some Pacific islands or countries like Cambodia and Nepal, ADB has a more substantial role to play, but still a minority one. Finding ways to channel more finance into infrastructure is pretty key for us. There's a changing landscape, and I'm winding down now here. Lots of developments across the region, socially, economically, from a technology standpoint. Whole new global agenda with the SDGs. There's new actors on the scene. I mentioned the Asia Infrastructure Investment Bank, which is set up to do infrastructure and is financing projects already in Asia. We are responding to this landscape, as well as the new Paris Agreement on climate change, and we're thinking we need to develop a new strategy because times have changed since 2008 when we had developed our last corporate strategy. So we have a strategy 2030 on its way, approved in principle this coming May. It'll be approved by representatives of our 67 member countries, including the United States. This gives a flavor of some of the things we're concentrating on. How to get more money into infrastructure, continuing to concentrate on social sectors or give more attention to social sectors, in part to address inequality. Related inequality is the continuing gender gap, which in some countries is particularly profound, and mobilizing private sources of capital, in part through public-private partnerships, where the private sector and government come together and in various contractual forms. It's a way of tapping into the private sector and provide government regulation and oversight. This gets at the point of there's a lot of money out there if we can only steer it to investment in Asia. 100 trillion, there's that T again. This is in institutional funds, pension funds, sovereign wealth funds, mutual funds, and not enough of that is going, from our point of view, into infrastructure. How do we entice that money? How do we de-risk it, make it attractive to cautious fund managers? How do we develop tools, packages, mechanisms, bonds, or other vehicles to move that money? This is one of the things that we're really spending a lot of time thinking about. And I have a few ideas on solutions to some of these challenges, but I'm going to let things sit there because you've heard enough from me for the moment and probably have some reactions or questions, and I hope you do. So thank you for your time, and I'm here for as long as you'd like me to be.